Oh, hey guys, I didn't realize you were here already. Welcome to the first episode of the Fundamentals of Financial Management. We're going to have some fun. We're going to start at the ground floor and we're going to build from there. Like anything in life, the more fun you have, the more it sticks and the more you retain and enjoy it. Finances can be fun just like anything else. So let's get started. Choosing the right financial institution is the first step to financial success. You have to weigh your options, do your research, and don't forget to have fun. With all the options available, you have to pick the right one for you. Remember, it's your money, and your financial institution should feel lucky to have you. Let's face it, most people don't select where they do their banking. It was either your mum's bank, your dad's bank, your cousin's bank, or you just happened to walk in one day because you needed an account. That's the first mistake most people make. You've got to do a little bit of research and you've got to find out what works for you. So let's talk about the different types of banks and financial institutions that are out there.
First, you have your large retail banks. They tend to have more ATMs, more locations, and a wider variety of services. Their technology is usually always more advanced. Next, you have your community banks. They tend to have more of a personal feel since they only serve the communities that they're in. They may not have as many locations, but they make up for it in customer service. And then there's your credit union, where you're a member, not a customer. They also may have limited locations, but they try to make up for it with exceptional member service.
So, a credit union may sound fantastic, but not everybody is eligible to join. That's where your research comes in. You may find where you work, the company you work for, has eligibility to join a local credit union. You may be able to get in through a friend or a family member. You may live, work, or worship in an area which, again, has you eligible to join a credit union. Credit unions typically have lower fees and lower interest rates. So let's do some quick calculations and find out what that actually means for you. So let's take a look at an auto loan. Most of us need, or at some point will need, a car. So you've done your research, you found the car you want, it's $20,000, and you'd like to finance that over 5 years. So you go to your bank, based on your credit, they let you know you're going to get an interest rate of 4.49%. That comes out to a payment of $372.77 per month. Sounds like a pretty good deal, right? And it isn't bad. But let's say we could get a lower interest rate with a credit union, and let's compare the difference. Now you're at the credit union. Based on all of the same information, they let you know they're going to give you an interest rate of 2.49%. That's a payment of $352.66 per month. Why is that better? Your payment actually went down $20.11 per month. I get it, $20.11 doesn't sound like a whole lot, but it gets better. Take that monthly savings, times that by the 5 years you'll own the vehicle, which is 60 months, and you have a grand savings of $1,206.60. When you focus on the big number, you can see the true savings. That's why it's important to shop around. Okay, so you see the power of that calculation? Even though the rate on the auto loan from the bigger financial institution to the credit union was only 1 or 2%, the savings really adds up. It's not just 1%, it's not just 2%, it's not just 3%, it's thousands of dollars over the life of the loan. So that's the power in choosing a financial institution that's going to give you a better interest rate. Okay, so there is the end of episode 1. We kept it light, we kept it basic, and hopefully you had a little bit of fun. It's a really good foundation for us to get started and kind of build from. Choosing the right financial institution will set you on the right path to financial success. Thank you for tuning in. It's great to see you, great to talk to you, and I'll see you next week.